Larry Ellison is currently overseeing a massive $50 billion capital expenditure cycle because Oracle's biggest bottleneck isn't customer demand, but the physical speed at which they can build data centers to house their backlogged AI workloads. Good morning and welcome to the CFO Suite Market Intelligence Desk. While the broader market fixates on consumer hardware, Oracle is quietly re-engineering the backbone of the enterprise AI economy. The company is currently operating with a trailing 12-month EPS of $4.45 and a formidable profit margin of 22.27%. But the headline numbers barely scratch the surface of the structural shift occurring within their cloud infrastructure. Executive Vice President Clay Magouyrk recently confirmed that the primary factor limiting even higher profit realization isn't competition from AWS or Azure. It's the lead time on power procurement and physical site construction. Oracle is effectively sold out of high-performance compute capacity, a dynamic that has pushed their 3-year EPS compound annual growth rate to 21.44%. To understand where the next leg of this growth originates, we have to look at the intersection of life sciences and generative AI. Oracle has positioned its data platforms as the dominant infrastructure for drug discovery, competing directly with IBM and IQVIA. By integrating the Cerner acquisition more deeply into the Oracle Cloud infrastructure, they are capture tagging the entire pharmaceutical R&D pipeline. Industry forecasts through 2040 suggest that Oracle's role in accelerating drug discovery for giants like Roche and Pfizer will transform their cloud segment from a general-purpose utility into a specialized high-margin clinical necessity. This isn't speculative, it's reflected in their 18.88% net income growth, which is being fueled by these high-stickiness enterprise contracts. The capital markets are beginning to price in this transition from a legacy database provider to an AI-first infrastructure play. With a year-over-year EPS growth of 16.75%, Oracle is outperforming traditional value benchmarks. The $50 billion CapEx commitment is a defensive moat against hyperscale rivals, ensuring that as the AI in life sciences market matures, Oracle remains the primary landlord for the massive datasets required for molecular modeling and clinical trials. If this level of institutional analysis is giving you an edge in a volatile market, hit that like button and subscribe. We do this every single day to ensure you're tracking the capital, not just the headlines. The synergy between Oracle's infrastructure and the broader semiconductor cycle is also critical. As Micron sees a 177% growth rate driven by high-bandwidth memory demand, Oracle sits on the other side of that trade as the primary consumer and deployer of that hardware. This creates a feedback loop. Oracle's aggressive data center expansion secures the hardware today to lock in the enterprise SaaS and IaaS revenue of tomorrow. Analysts at Zacks have recently highlighted Oracle alongside T-Mobile and Gilead as key institutional holds, specifically because Oracle's transition to a subscription-heavy, cloud-native model has de-risked their cash flow profile while maintaining exposure to the AI upside. Our earnings trend analysis model indicates that the current momentum is sustainable, supported by a net income trajectory that is finally decoupling from legacy hardware cycles. We are looking at a company that has successfully pivoted its entire capital structure toward the most capital-intensive, yet highest margin segment of the technology stack. The windfall Magouyrk referenced isn't just coming. It is already being built into the ground in the form of gigawatt-scale data centers. We are issuing a bullish outlook on Oracle with an 80% confidence score, predicated on their ability to execute the current $50 billion build-out and clear the existing backlog of OCI demand. For more institutional-grade financial intelligence and to stay ahead of the next earnings cycle, make sure to subscribe and visit thecfosuite.ai. This analysis is powered by the CFO Suite. This content is for informational purposes only and should not be considered financial advice. Always consult a qualified financial advisor before making investment decisions.